Ladies and gentlemen, boys and girls, welcome to the Big Tech Frenzy. In today's video, we are talking about SoFi. I'm just kidding. There's other things. We're talking about AI. We're talking about Google. We're talking about the markets in general selling off, that sort of stuff. Now, all the comments about late, hello. I arrived. I'm here. You know, what's the problem? I'm on time, okay? You guys arrived early, expected me earlier, but I arrived when I arrived. Happy you guys could be here to join me in this amazing live stream. SoFi, yeah, SoFi. It's a stock. We're going to talk about it. And then also there was another comment. What is a SoFi ETF, as the title might suggest? Well, SoFi's got quite a few financial products, which, unlike other fintechs that we end up covering on this show, SoFi actually ends up creating their own exchange-traded funds, which means that they will set up a basket of ETFs, a basket of stocks, so that it's a one-click purchase to get access to, the next 500, what they might say, composed of 500 mid-cap U.S. Companies weighted by 3 growth signals. Mid caps have extraordinary potential for growth, yada, yada, yada. So they have a bunch of these, some of them more popular than others, but this is brand new. The AGIQ. This is their new ETF that ended up getting started today. Okay, it opened up for trading today. And it actually has a lot of AI-based companies that might attract some new investors to buy one singular ETF that has a large bulk of the companies that some people might be looking forward to owning. That might end up showing off some AI names. Now, like most basket of stocks, there's always names that people are going to nitpick whether they do have them, and people might suggest that they are not the most innovative or not AI names. And then on the same breath, they might point to other companies and say, how is this name not available? So I ended up putting out a post online because this list was a little bit controversial in terms of having certain names that people thought were, Thermo Fisher Scientific might, be on here. Maybe that's not an AI name, right? In the same way that maybe Zoom Communications, is that really the AI name of the century that we could potentially be purchasing? And then other people said, hey, where is like ones that I ended up highlighting? Microsoft, Meta, Google, right? Amazon. These are some of the biggest names in all of artificial intelligence. Now, the only problem is, although they might be the biggest names in artificial intelligence, they also have other parts of their business that are watering down those results, right? Which is not a bad thing for those companies, but it might be bad if you're putting them into an ETF. So I understand that. But there's a lot of companies here that, Deere and Co., that might have artificial intelligence, but also watered down by other business lines as well. So, I mean, yeah, it's up to you guys if you want to purchase it. Right now, you can see by the market values, this is extremely small. This ETF just ended up starting out. But the interesting part about SoFi getting into these types of products is that for people who want that easy one-click solution and are not available, and these types of products are not available on other brokerages, that going into SoFi Invest might get them on the platform. Or if you are buying this ETF on a different brokerage, then SoFi is also charging nearly a 0.7% management fee for all the assets under management that are sitting on that ETF. So they're going to make money either way, right? But getting into these types of products and staying in the sort of popular realm of investing, which I would say is more on the growth side, very retail heavy. Artificial intelligence is obviously, it's very institutional based as well, but these names are going to fit in well with crowds like, the 275 of you guys that are already in here. An index like this or an ETF like this definitely fits more of our style than potentially others. Now, and also, I love the weighting. How NVIDIA is a higher weighting than the S&P 500. Love it. 8.7%. Keep it ticking. So, not bad. Not bad. What did you guys think about that first off? Any of you guys end up buying into that ETF? I know some of you guys I saw on X ended up saying that you are taking teaser positions, or I actually saw a couple people saying they're putting in a decent amount into the AGIQ ETF. Is this a way of purchasing into a position that's, allows someone else to do all the work for you and you get to benefit from artificial intelligence? Or is it a little bit risky to let someone else purchase into this and you would just rather buy, like in my opinion, the names that I know very well: NVIDIA, Google, Microsoft, these sort of ways to take advantage of artificial intelligence? Now, one of the other things that I noticed, because AMD is not on that list, Amazon's not on that list, Apple or Meta, some of these names are not on that list. It was kind of interesting comparing this to Cotue's 2030, what they called their AI 40. Okay, these were their top 40 names, not just companies, but assets in general, that they believed would be doing the best, or they're the best plays for artificial intelligence over the next little bit. And not just artificial intelligence, just the greatest names. I think they called they're like Future 40 or something, Futuristic AI 40. But if we are to, let's see here, organized by market cap. Why is this one broken? How did I break this? What did I do? I don't know. I don't know why that's broken. Either way, they did. I think this is actually taking my total from the bottom. I think I had an average and a total. So I think that somehow just got filtered to the top. No problem either way. Microsoft is what they presume will be the biggest company in 2030 at $5.7 trillion market cap, and NVIDIA second place at $5.6 trillion. It's looking like we might get there a lot faster than what they might suggest. And then Bitcoin, Amazon, Meta, TSMC, Tesla, Broadcom, OpenAI, by the way, at 1.6 trillion. That's super interesting. Oracle, Tencent, all of these names. But you're also seeing the same mix of missing, AMD from this list, missing Apple. It's interesting that some of these investors have written them off from being some beneficiaries of artificial intelligence. I don't think that's true. I think AMD is going to stay doing very well. I feel more confident in betting on NVIDIA personally, but to say that, AMD does not deserve to be on the top 40 list of the biggest and most influential names of artificial intelligence, especially for an ETF that's betting heavily. Maybe there's an overweighting on semis already because NVIDIA makes up for nearly a 9% stake, but come on, like TSMC should be on there, AMD should be on there. Obviously Broadcom is, but they very well should be, and that's another good one. But yeah. Let's see here. Did you guys see my video earlier today, by the way, on the Google, what do you call it? Google Trends data that we ended up seeing come in for SoFi? Q3 is looking pretty good. I mean, that's my only problem that I have with doing the videos versus the live streams. I don't see the immediate reaction to the videos. Obviously, some people comment, but I'm curious what you guys think and how heavily that's going to correlate to real Q3 data. Some people, like I saw a comment saying like, oh, it's so stupid to judge a company based on Google Trends data. I mean, how is that any different than judging foot traffic through a retail store or something like this? Like the direct, people typing in, not just personal loans or debt consolidation, but literally SoFi loans, how to get, blank, specifically for SoFi checking, SoFi bank. I think that those are very important searches. I mean, I could be wrong, but Google Trends is showing not just spiking in Q3, but almost a consistent higher average in Q3. And it looks literally from like June 30th to July 1st is whenever things started to tick up. Okay, there was a real breaking point where Q3 looks to be a ramp in growth. So that's pretty interesting. I'm going to keep an eye on that, but this is another reason. I mean, if SoFi continues to impress on the level of growth and they could keep up 30+% growth rates, and not on bad comps, but on really, really good comps, okay? And we end up seeing 900,000 plus new member growth, maybe 1 million next quarter. Like, SoFi is going to impress to the upside versus many skeptics on what they think is going to happen on SoFi, especially like the David Chiavrinis or the what's the other guy's name? Not Ram, but the guy that he did a podcast with that's an actual Wall Street analyst. Having a $6 price target or something like that, even today, whenever the stock is sitting 20 pluses and is going through these very volatile moments, and people are keeping the stock above $24. Yeah, it was Giuliano Bologna. How can you continue to hold a $6 price target whenever you see the ramp in growth? Not just that, a ramp in the level of banking metrics, right? The ramp in tangible book value, because that growth is leading to real profitability. Not only are we growing a ton on, like their revenue, but that's flowing down into better and better margins. I'm telling you, a lot of people brush off SoFi, suggest I talk about it too often, but I think this could be one of the greatest sort of like hidden gems in the market. It's starting to be appreciated now, but if they actually continue to not only take that ball, but run with it continuously and increase the level in which they're growing at, I think that there's a real possibility that over the next 4-quarter prints that we end up surpassing $40 per share. And then we're talking about a real generational name where we've been covering a name from $4 up to 40. And the people said that, this was opportunity cost or something along these lines, may have missed out on a potential 10x. And you didn't even need to buy the bottom, right? Purchasing it at $6, $7, and $8, you had not a few days to purchase at like you did at $4, but months, if not potentially even like a year span to purchase within that range of $6 to $8 per share to get, a 5x or above, if those price targets that I'm assuming come true. So, hopefully we can be a part of that generational wealth. I know for a lot of you guys already, I mean, Roy even has a average cost of under $5 a share, above $25 on a stock price. That's a 5x on a quote unquote bank that doesn't move, that won't appreciate, that won't get multiple expansion. You found a 5x. It's pretty interesting. Now, hopefully they can take that rise in stock price and acquire better management, for which Noto has already tweeted out that he wants to essentially hire at the fastest rate that they have, go after the best of the best talent, his words, not mine, and continue that sort of, ball rolling forward. We'll have to see. He said artificial intelligence and blockchain are the two biggest areas that they want to focus on going forward. Those are the two areas that I'm most excited about. Those are the two areas that allowed people to give a massive multiple to Robinhood due to their level of pushing out new products. There's a very high chance that they end up getting level 1 options out in the next month or even 2 months. That's going to convince a lot of people, not just to potentially use SoFi Invest, but then as their portfolio scales and the next bull cycle that turns people that bring a couple $1,000s to have some real wealth on the platform, hundreds of thousands of dollar average customers, potentially even if we actually take a look at the products that SoFi is working on, I can bring this up here, but they have a lot of people with millions of dollars on their platform because they're talking about increasing daily limit withdrawals to, $3 million or well, I think that was more on a monthly basis, but I think it was $50,000 withdrawals, $250,000 internal transfers daily. You're not doing that unless you have customers that actually have that amount, and that amount of money pushes SoFi Invest to be a much more beneficial product for their financials and then to the bottom line. It costs the same amount for SoFi to maintain a customer that has $50 on SoFi Invest as it does to maintain a customer that has 500,000. So the 500,000 obviously has a much higher upside. So we do want to continue to work up a better and better customer, and that's what Robinhood has done, and that's also why their margins have expanded so much, because their costs to serve are fixed, but their customer loyalty and the type of customer that they're bringing on continues to be multiples more beneficial for them on the bottom line. Gonna have to DCA up, and if it dips more before rate cuts. I mean, hey, the thing is if you want a few names, let me just adjust my chair. If you want a few names and you want to be concentrated in those names, you're going to have to DCA up. Stocks go up, right? You may want to look for a dip in certain businesses, but you're never going to find certain companies. Like I would suggest SoFi. I don't think you're ever going to find this company in the single digits again. In the teens, absolutely. Or, well, not absolutely, but there's definitely a possibility, right? There could be big dips. And the more mature a business gets, the harder it is to pull it down. But the amount of index inclusions that SoFi is seeing also stops it from falling even lower, which can be beneficial. Unless something financially changes. I'm not suggesting this if they end up getting into bad business practice, underperforming something like this. Absolutely, they can go back to single digits. But yeah. Speaking of which, I thought that this was quite interesting. And I said speaking of which, but I wasn't speaking about it at all. But I quickly wanted to talk about Ethereum, if I can, which is a completely different topic, but I said speaking of which. I wanted to bring up this 1971 moment for Ethereum, which Tom Lee had indicated. I want to show you guys this video. It's only 40 seconds long, and then I want to show you some other reports that ended up coming out today about Ethereum.
So in our view, Ethereum is having its 1971 moment, where the real-world assets are becoming synthetic or tokenized. Treasury Secretary Bessent sees this becoming a multi-trillion-dollar market for stablecoins. And it's not just stablecoins, but banks are already moving to build products on Ethereum, whether it's JP Morgan, Robinhood, Goldman, Bank of New York, even Walmart and Amazon. So what does this mean? Well, in 2025, as the real world becomes digital, it's going to be natural to say, I want to find the digital store value, and that is Bitcoin. And I'm a believer in Bitcoin. But it's also going to create a market for digital assets. And we think the winner there is Ethereum. And in fact, Wall Street is building here on Ethereum. So
I just want to go back to that last image. And this is why I always talk about Ethereum being more of a technology company. And if you look at it this way, I think that if you are an equity investor, you're a technology investor, you're betting in the likes of cybersecurity and artificial intelligence. I think Ethereum, if you really look at it, fits in so well to a technology play. And whenever people separate it into different asset classes, I think it actually is more confusing than looking at it like a technology business. I actually think that obviously, tax situations, the way that you house those assets is much different. I'm not your financial advisor. Talk to a tax specialist. But Ethereum has definitely gotten a grip over institutional investors, and the amount of companies building on Ethereum, like Tom Lee said, is ever increasing. You're seeing Robinhood do it. You're seeing JP Morgan do it, Walmart, Amazon. And so you're getting a mix of the fintechs, large banks, and fintech adjacent non-financial companies that have fintech products with it. Think, Walmart, Amazon, Starbucks, these sort of businesses that will adopt it later on. And then as things get more digitized, we're essentially tokenizing all of Wall Street. These are multi-trillion-dollar opportunities. And for the most part, that's going to be done on one chain, right? Ethereum looks like it's going to be the one that stands out in that crowd. But is now the time in which things break out? Well, we have to continue to follow the data, but so far it's looking like July and potentially even August are those breakout periods for Ethereum. Whenever measuring the amount of transactions on Ethereum's network, we just broke another record in August. Okay. By far the highest monthly amount of total transactions, which has seen a tick up ever since we lowered the cost of the gas fees on their main chain L1 transactions. So this will continue to grow just based on that there can be more adoption at lower prices. It's not like what we saw back in 2020, even though we did see a large amount of growth. There was also, huge prices to pay on peak levels for Ethereum. It's not that same way of paying $50 per transaction. So things have changed. In that same breath, we also still are seeing the apps that build on Ethereum making more and more revenue because it can be judged by the amount of gas fees that end up going through those applications built on Ethereum. So we're also seeing that the level of revenue is also at an all-time high for L2 applications. All right. So Ethereum's looking very good. Whether or not you follow the price, which can also be volatile, right? We follow SoFi stock. SoFi stock has a red day. Doesn't mean that, SoFi is having worse performance. No, there's also sentiment, right? High beta and low beta names have this weird, relationship where a lot of people like to flee to more defensive and secure dividend names, more mature businesses, and they flee away from growth. And then whenever times are really good and people believe that the economies are good, then they bet on high beta names and wish for growth into the future. And that's really where I do well, is betting on the high beta names, not playing cyclical and trying to rotate my portfolio. Obviously, the best investor would rotate their entire portfolio into the next name that makes it, but that's not possible, right? Or at least improbable. So I don't try to do that. I buy what I think is the companies that are working. I follow it, too much, and then just continue to buy whenever things are down, and then hold for whenever things are good. And if I need the money or I think there's a better opportunity in the markets, I'll sell those good positions to buy great positions. And maybe one day in life I'll need the money, but that's not today. And maybe your situations are different, but then you'll have to change the percentages in which you can bet on more risky names at certain periods of time. Or maybe you have a percentage of your portfolio that can be on more speculative, riskier names, companies that might not own a market but are growing in a market. That's where you can put a percentage of your portfolio, and then a little bit more secure names as well. If you need money, if you're actually looking forward to redemptions in your portfolio. Stop saying every other phrase. It's not a thing that I'm actively doing. I'm just a bad speaker. Oh gosh, I just did it again. I tried to do it while explaining that I'm not a good speaker. I've never taken any lessons or anything. I'm just doing my best. And then the phrase that would fit in there. I won't say it, okay? Do my best. Okay. I also say that, man, I'm the one that has to edit my videos. It's a torture. I hear it. I mean, you guys listen to it as well, but it is... I don't hear it right now, but I do whenever I re-listen to these shows. It's awful. You speak great. Kelly, you're the first person to ever tell me this. All I hear is I'm ADHD, I'm all over the place. I have concepts that are hard to follow, and I have so many filler words that it's probably more than the words that I'm actually, trying to get across on my topics. It's just there's a large enough audience that doesn't care about the way I say the words. They're just focused on the content. And for that, guys, I appreciate you making my dreams come true. And I'll continue to try to find names that are working. Okay. And if that relationship can stay alive, we'll do just fine. But trying to get better in speaking. I mean, for a person that speaks as much as me, it's insane how bad I am at it. Piyush, SoFi Technologies has launched the SoFi Agentic AI ETF, AGIQ, targeting next-gen AI companies, including autonomous vehicles, cybersecurity, and semiconductors. Buy the dip for the community portfolio. Piyush, thank you so much for the donation, brother. I really do appreciate it, and I absolutely will. Let me just make sure I screenshot that. Boom. No ETFs allowed. If it's a SoFi ETF, it's allowed. Well, okay, he's not buying the SoFi ETF. He's just saying buy SoFi. I see what you're saying now. You're saying the rules do not allow for ETFs. Yeah, I will not buy AGIQ. I think he's saying buy SoFi. BMNR Heart. How did BMNR do? I did not actually follow the markets as much as you would think today. Up 5.5%. Gotta like it. At $44.86, which I actually think is still just slightly above my average, a few cents away. Join a debate team. Not too bad, right? And I would have a pretty good teacher to join a debate team for sure. It's been a very good pleasure to get to know Amit and not only that, but argue with him online. And he's trying to pull out all these moves on me when really I know zero of what he's trying to do. I just think his points are sometimes dumb. Like the Apple, him not being able to switch even if Apple's products did not keep up with the advances in artificial intelligence, which I actually think they will. It'll just be from adopting their competitors' products like Gemini. So he can do the argument, debate jujitsu on me, but I just get to say no if there's no judges, right? Well, I guess you guys are the judges, but if he's wrong, he's wrong. Okay. There's always room for improvement, but you sound fine. People just love to complain. No, I mean, I hear it too. It drives me nuts, and maybe I'm nitpicking because, it's my everyday, but I do notice it a lot. I've got a lot of filler words, for sure. A lot. We do our best. Okay, let's see. Management said 25% EPS growth after 2026. So PE of 30 might be reasonable. Well, I mean, it depends on how you really look at it and how far you want to look at their peg. They're still under a 1x price to earnings growth ratio. So the market would suggest that they are still undervalued here at a much higher peg than 30. So if it dips any lower, I'm going to be a purchaser again. I sort of purchased in like the late 23.80 mark, something like this, which I did a couple of purchases in. But yeah, I'm buying Future Investing's community ETF. We're gonna see how it does, and I've got faith. So far, it would not have been a good purchase. These are not my picks, okay? And I don't think that it's because retail is poor investors. What I think it is just the way that it's designed is that people are trying to give me their most speculative plays. So they're either 5Xs or go to zero. And I don't like building a portfolio with that much risk reward. Like just those are the highest beta names, highest. And I like a high beta name, but once you start getting into like 4X beta, like just insane names, which are the companies that people really like to lean towards. And I've capped it at a $1 billion market cap minimum. And there's been a lot of donations that have come in to offer for me to buy an under $1 billion market cap name. Which, if we followed that, whew. Yeah, it's the Future Investing 100. Yeah. I think we're already at 105 or something like this. 105 names in there. Taiwan Semi Deep Dive, such a cool company. I really should. That's a name that I would love to not only have a stock tank on, I'd love to do sort of a Fiscal Friday deep dive on it too, look at more of the financials. I think that could be a very, very good name. It's also why I picked them in the stock draft. So need to learn a lot more, but I think their position in the market is very exciting. I also picked ASML in the stock draft as well. Big fan of the semi names. The only thing is I wish I ended up getting AMD, and I wish I got SoFi, obviously. I wish I just went full semis, full financials, and yeah. My portfolio has benefited greatly from sticking to that strategy, for which I got a rashy bunch of crap for over a long time. But that's what growth investing in sticking to your guns and buying both fundamentally, but also like qualitatively, is that you have to not look at the chart as much and instead look at the company much more often. And the time frames can be long, but if it's anything like SoFi, what happens whenever you're fundamentally investing is that you buy a company and it can wait a very long time. You could sit there and just hold on to something that doesn't move for 3 years. And then after 3 years, it can go up 100% in a month. Or in the case of SoFi, 250% over a 1 year period. But we had to sit on it for a long time. And to me, it actually benefited because that allows me to do even more research, double down on my convictions, make a large position of it, and then, benefit later on. And if we get a name really right, picking, let's say SoFi, for example, maybe it's 250% this year. Let's hope in my case, or like from what I'm hoping, is that it's another 100% next year. And then a continuous outperformance of the S&P 500, maybe a 20% growth or something like this for the years going after. Or even 18% growth or something like that. I still want to continuously outperform, right? But I don't mind outperforming by... If you guys have stuck around on this channel long enough, you'll know I look to outperform the markets, or else we shouldn't be individually investing. We should just be buying the S&P 500 if we're not going to outperform. But the percentage in which I outperform is not up to me, so I don't look at that too much. I mean, happy buying Shopify, happy buying Nvidia, happy buying SoFi, but the individual years that those companies have is not what I'm judging my success on those individual names on. It's their market share growth, it's the total addressable market growth, and then it's what are their margins doing while they're growing in those markets. What's your opinion on Grab? Do you own the name? I do not own Grab. I think the way that people should look at it is that there are two institutional names that me and Amit hold. He loves Grab and loves that part of the world. I don't follow that, geography. I more closely am tied to Latin America through different picks, Mercado Libre, Nubank, and SoFi to some degree with the way that they're growing into LATAM. So for me, tracking Brazil and Mexico is much more easy whenever you have multiple names. So I don't think he holds any Nubank. I love Nubank. He loves Grab, and those are our individual geo names or international geo names. I did not buy Duolingo, but the lower it goes, the more interested I get. I think we're at 281 at the end of the day. Let's check here. 282. After hours, 283.90. One quick second. I'm just going to blow my nose really quick. People can say Duolingo sucks, and I would understand that if you held it and it's falling in your portfolio, and you potentially made a mistake by buying it a little bit higher, which, like I said, might not be a mistake if it ends up continuing to climb over time. But like over the last 3 months, you're down 45%. That's insane. Okay. I think this is the absolute high. So I know a lot of people were accumulating around this area, 350, 345, sort of. And earnings were very good. Surprised a lot of people to the upside. I was sad I didn't buy the day before. And then even after earnings, we've fallen even further. But is this narrative driven or, fundamentally driven? I think it's very clear that it's narrative driven. People are worried about the future, but they don't have any data to prove it. And I think that's also what brought down Google, But look at Google now, baby. Look at Google now. Out of the companies that I follow in this, list on my watch list here, it's the number one name that moved today. Google up 9%. And they're one of the largest companies in the entire world, growing faster than SMR. That's just crazy. That's just crazy. Right? So this name, a lot of people had said similar things to, I'm not a Google fan. There's too much heat on that name right now. ChatGPT is such a great competitor. And they stuck it out and also won a court case. And, I don't think search is dead. That's still up for discussion. But the fact that they get to keep some of their entities also takes away from a lot of that bearishness, which had dragged the price to earnings ratio down even further to, 20 ratios, which compared to the S&P 500 places them much cheaper than any other industry, right? So it's silly to me. Largest non-earnings Google gap up since 2006. Yeah, I think I saw that as well. And in 2006, that was because they ended up getting entered into the S&P 500, if I remember correctly. Bro, I think Duolingo is overvalued because he can't do so much money. Okay. I have heard from some people that have been, using Duolingo, people that I trust, that have also said like the actual results from using Duolingo is not as great as other techniques of learning languages. That it's really good for reading, but in terms of like true conversation, then it might not be that great. Very anecdotal. But does that even matter? If there's higher user bases, more growing, it's almost like Tinder, right? Like Tinder doesn't even want you to find a match or else they lose a customer. Does Duolingo even want you to get good enough where you don't have to use the product anymore? Or do they want you to have a, 1,400 day streak? Yo, Tanner, are you excited for the Hood event? I am, and I heard there's going to be other exciting people that are there that week that I am over the moon about. I cannot wait to meet some of the people that are going to be there. So I don't want to spoil anything if it's not public. I could check their Twitter to see if maybe they posted about it. But I'm going to meet someone that I've obviously known about online for some time, but I have not been able to meet. And I just can't wait. Just super excited. Amit? No, well, obviously I'm very excited to meet Amit. It's Chris. We know Chris is going. Yeah, I mean, it was Chris. I didn't know that if he said that it was already already announced. But yeah, I'm super excited to meet Chris Patel. I didn't know that he was going until very recently. Yeah, really, really excited to get a larger group together. It's going to be so freaking amazing. We got a fantastic group that's going, and it'll be a unique time. And I know a lot of you guys are also going, and that they've still been sending out more invites. So yeah, unbelievable. Okay. IFS, please. Need the IF 100 to be the IF 200. Great. Thank you. I don't even know if I know this name. Intercorp Financial Services. Am I crazy? Should I know this name? Why am I blanking? I feel like I do know IFS, but in the same breath, nothing's coming to mind. So, yeah, okay. If Amit already leaked it, then that's fine. Hitting the gym today, Tanner? Dude, I am feeling amazing these days. Doing really well in the gym. Showing, I mean, not that it's just like I'm breaking PRs and stuff, but just, my attendance is really great and feeling good, feeling strong. So, yeah, thanks for asking. I am. Things are good. Okay. Glad now I only got one share of Figma on IPO. I don't know what people like. What were you hoping for? I had said countless times, like a stock that they get the CEO gets an unbelievable bonus if it stays above $100 per share. People just kept pumping it, pump higher and higher and higher. I was like, how high do you guys think this is going to get? People I saw buying it like $140 or something like this. It was like, what are your hopes here? Raising up to $142.92. Now end up falling all the way back down. And it's still above IPO prices. But if we look a little bit more in the after hours, because they shown off earnings today, it wasn't the best. Down 14%. Bullish is also getting wrecked today, is it? And what's that news on? Down 12% and another 1.75% in the after hours. What was the news on Bullish today? I thought that they ended up talking about new management today. Did they not? Didn't they announce a new head of CoinDesk or something like this? Those IPOs are basically free money. I think that that's a mindset that's going to get people hurt in future quarters. I've said this a couple times, but I think that the AI bubble that ends up popping is from the SPACs and tokenized shares and all of these different ways that people are going to gain IPO access, I think it's becoming super popular. The more Figmas and bullish, like all these IPOs that we end up seeing that are immediately pumping 200% in a day, like just unbelievable percentages. Circle saw it, Figma. There's countless examples of this. Not countless. I mean, you could definitely count them. It's not that many. Probably count them on two hands. But still, I think that allows like investment bankers to go to these private companies and say, now's the time. Like the market's hot. You can get incredible, like we can ask for a lot. We can upsize these offerings. We can get a better market price for your company. And the company might not be of, the quality that it deserves to receive such a premium. And so I think that a lot of these founders, especially ones that have been around for so long, building for a long time, will use retail as exit liquidity and actually be able to make some money from a company that they've been building for so long. And in the amount of AI startups that we're seeing, if things like AGIQ, what SoFi just put out, and these types of ETF products become so popular, if the demand for artificial intelligence is so hot that there's more IPOs and these sort of things, I think it could lead to, like, that's what could start a bubble. Having the Amazons and even the Ciscos and Walmart, like all the good companies on the markets being very popular in the early 2000s, that's perfectly fine. It's the pets.com and, these sort of just blanket websites that ended up coming up with no product, just ideas, essentially, zero revenue, that pumped up to billions of dollars. I mean, that is how the dot-com bubble actually happened, which was a growth style bubble. There was the financial crisis. There were many bubbles, but I think the one that translates so much to today is the dot-com bubble, because it was a lot of excitement for the future pulled forward on new technology. For many of the companies that we see today, they have real customers measured in financials, not so one of the things that I think also got a lot of people lost in the dot-com bubble, from what I was reading, is that people stopped measuring things based on revenue and profits, but more on website traffic, visits, return customers, these sort of things. KPIs, but not GAAP metrics. And I worry that AI is going to trick a lot of people by, hey, don't look there. Look at our usage, look at our customers, look at our tokens generated. Don't look at the financials. Luckily, the biggest names in AI are the biggest internet names, so they already have existing financials, which is very good. And then on private markets, we don't have access to a lot of those types of companies. Are we all members yet? No, I actually think most of those have sort of ran off after the last month. Macy's went up 20% today. Yeah, I don't think I follow Macy's. Isn't there a ticker symbol just like M? Yeah, 20.6%. Jeez. That must have been some slamming earnings, eh? I don't follow Macy's, though. Not a name I care about. Not that you can't make money. I mean, a lot of people made a lot of money. Let's see. Why would Macy's go up that much? I mean, I'm sure it was larger than expected beats. People go into the stores, they bought more product than people would have thought, and they, yeah, I don't follow Macy's, so it'd all be a guess, but potentially new marketing efforts, stuff like this. Who knows? Market is red. Should I panic sell my entire position? SR is a very smart person in this chat. He's baiting me to allow me to talk about this type of subject. But the answer is obviously no. I think that September is a self-fulfilling prophecy where everyone expects that there's going to be a dip, so then we front run dips, and then people use any bit of macro uncertainty and be like, that's the reason why. Even though during the bullish months before, the market would just, take those bad reports or uncertainties and just spit them right back out, right? We were able to run with the punches before, but all of a sudden, once it's September, no, those are huge issues. I mean, unless you think that rate cuts in the future or the defense against poor macro, whether that's inflation risks or jobs numbers, is if the defense of that is also bad for your business to a point where, here's the problem. Is if you're betting on companies like Open Door or SoFi or something like this at the time whenever rates ran up so much, those can have real fundamental impacts on your portfolio. If you're betting on SoFi and expecting that, rate cuts are going to double the stock price or cut it in half, you're most likely wrong on both accounts. Rate cuts for the, short duration loans that SoFi mainly holds, it could be a benefit for them being able to sell more loans than they have before. It also increases prepayment levels, which is bad for SoFi because they pull forward the expected amount of interest that they're going to make on those loans. So that's actually bad. But overall, I would say that it's good because they get to sell more loans at higher coupon rates, or the spread is higher at least. But there's still such a small impact because of how short duration SoFi's loans even are, right? Same thing with Affirm and those sort of names. The rate cuts are actually not as crazy as what you would imagine versus other financials. So it depends on what you're investing in, but for the most part, I would say the markets are always overblown during these types of times, and I'm going to continue to focus on the technologies that make real financial differences, or the moves that make real financial differences. Trump can make those types of moves, changing policy that, makes tariffs and other pricing with other countries very hard. Wars make, countries not be able to be large purchasers of luxury products and these sort of things. And all those types of things can be very bad for business. I don't really see anything too strong right now happening that takes away from the bull cases of the types of companies that I'm purchasing. Seems like the more I look at it, artificial intelligence is not a discretionary purchase. And in fact, it becomes more and more of a necessary purchase. And the private companies in different governments are telling their government that they need to take artificial intelligence much more seriously, and that they need the ability to get regulation through much quicker to even stay in any sort of race. And Trump is happy to do large deals for, different countries like Saudi and potentially even Chinese AI companies that might want to purchase NVIDIA or AMD chips and these sort of things. So those are the names that I'm really focused on purchasing more of right now. Yeah. Yeah. Europe is so behind in artificial intelligence. Even their user base is still very low. Yeah. Yep. But overall, I think that there will be growth across every single country almost. It's like judging something that's more important than the internet and being like, hey, who's going to adopt first? But we're all going to be on it. Like everyone's going to have a smartphone. It's just a matter of who are the sooner adopters, and then you're betting on, hey, would we prefer to bet on Android or Apple or try to pick the winner, right? I'm betting that NVIDIA plays a large part in the infrastructure for artificial intelligence going forward. I'm 100% cash right now. I think that's fine if that's your style. If you're able to sell out and buy in at a better time, great. But I've seen it countless times where people have told me that now is a bad time. And then the next week it's much higher. And if I would have sold everything, I would have had to buy back in with less shares than I did previously. So I don't really, while I'm looking at the same data as you, it's not as easy for me to pull the trigger. Okay. I'm 100% SoFi right now. That's more like it. Yeah. No, I'm not 100%. I'm not 100% SoFi at all, but yeah. Yeah, I'm not a trader either. But in the face of all this technological advancement, I've tried to be smarter than the markets before and sell out of certain positions to buy lower and double down. Even though I was bullish, I wanted better pricing, and I've gotten burnt. So I hope and pray there was a different outcome for you guys, but there wasn't for me. So I've learned my lesson there. Maybe it was a bad lesson. I don't know, but that's the lesson I've learned. SBET versus BMNR. Not sure. I'm buying both. But I think I'm leaning more towards BMNR. And I think the idea of a quote unquote Tom Lee premium was overblown. I think that the more popular stock allows for a higher multiple because institutions know that they can get out at any time that they need. It also means that they will be able to sell more of their equity to go buy more ETH at their discretion whenever they want to. Why would anyone buy SBET after 2 reverse splits? Well, it's a very different situation. Now is not the same company as it was before. It's now an ETH treasury. And the people that are running this business is the co-founder of Ethereum and, one of the largest names from BlackRock's asset management. So, very excited on their ability to know the inner workings of Ethereum very well, know when, how to stake in a very appropriate way, how to acquire more ETH in an appropriate way. And reverse splits are a sentiment thing. They don't actually hurt the company, other than potentially options, premium, stuff like this. But I look at the valuation of a company in its current time, and we see how much Ethereum they hold. We see what that multiple on their market-based net asset value. So I think right now they look fine. As treasuries go. My opinion, only new is the most undervalued stock I'm looking at. I mean, it definitely is undervalued. They just continue to kill it, right? And I'm hoping for a big catalyst soon that gets me excited about the name, potentially entry into, Argentina, entry into the States, entry into Peru, Chile. Any of these things would get, I think, the markets, excited again about their name. But yeah. They just recently launched a Bitcoin futures contract ETF. And And NewCell announces innovative gigabyte reserve benefit and payments via new bank account. Yeah, not too much new here. Nubank Ultravioleta unveils new benefits with point program and airlines partnerships and 1.25% cash back. Crazy. I know it doesn't sound like a lot, 1.25% cash back, but that's huge in Brazil, where the card benefits are very lackluster and there's not a lot of credit card competitors. Tanner, do you have any concern over the effects of rate cuts on Robinhood? Will it have a negative effect, or it will have a negative impact for them, correct? No, I wouldn't say so. Also, Tom changed his hat. He changed his tag. He's no longer TM. Congratulations, he found it. But no, I wouldn't necessarily suggest that. It will have an impact on their net interest income, or could, right? I would say, nearly guaranteed. But the hope is that as rates come down, they end up seeing more activity on the transaction-based side, right? And that they can do both sort of in tandem. But yeah, I don't think it has a directly negative impact on them. It has a direct negative impact on one line item in their business, but then hopefully that gets filled by other new product lines based on a lowering of interest rates or capital markets activity, stuff like this. Why not just buy ETH? I cannot buy ETH as fast as SBET or BMNR because I have nothing to, I don't have the velocity that they do to go out, sell equity and buy back. Just the idea of the way that they are working on a per share basis, they're able to acquire so much ETH going forward. And then their ability to stake, their ability to purchase. It's not like me. I've got to go through brokerages and institutional clientele that all want to take it. There's so many middlemen that I have to go through. I've got to pick these nodes that end up, having their take. If I stake through a centralized exchange, then they take their take. They have a great way of staking. They have a great way of purchasing. And a lot of people literally can't stake, depending on if you're in New York or something like this. But yeah. Do you think SoFi in 10 years will have a dividend? Yeah, probably. In 10 years, I could see it. BMNR is high risk, high reward. I mean, it is, but it also I think they're at their net asset value right now. So how risky is it? Can't stake ETH in Wisconsin. Gotcha. Are you willing to hold some shares or split sell and keep some? Adrian, what are you referring to? The question is, how solid is the floor in ETH moving forward? Well, I do think that, like any stock, there will be volatility, but I think that we are in a moment in time that had a massive catalyst, and we'll have another catalyst here in a month, where we are getting legislation, like policies are going through that are allowing institutions to have more interaction with cryptocurrency, right? So this is not a sentiment change or something like this. This is hey, before it was either illegal or a gray area, and now we're getting very clear instruction on how we can use blockchain. And from everything that's been coming out, it's been very positive. And according to David Sachs, they want to push through even more. So hopefully the ability to offer a yield directly if you house those deposits, and then also the Clarity Act, which is more on the infrastructure side. So it's not that Ethereum's been around for a while. Hey, what's the moment? Well, we saw the moment. It was the Genius Act, and it's going to be the Clarity Act after that. So I'm just I think that was the moment, and now you're getting a lot of big banks and fintechs and everything that are building on that infrastructure now. So now is another build phase, which is going to have 6 months, a year, 2 years, 3 years for new products to come out that are on chain, right? Robinhood's been talking about tokenizing a lot of assets, but we've only really seen the first little peak of that back in France. They're also supposed to be coming to Canada soon, right? Through their acquisition of WonderFi. Are they going to do that by getting, real brokerage licenses, or are they going to do that by going the crypto route and offering tokenized assets? Who knows? But I think the finance industry is unbelievably huge, and the ability to not have to worry about collateral and transfer money instantly will be one of the largest unlocks in the financial world. It might take them a while to get there, but once a big bank starts interacting more on the blockchain, their other competitors are also going to have to do that, or else they're going to risk losing, large clientele. Yeah. And it's not just private market tokenization. I think it's much, much more than that. I think just capital markets in general, right? Like large banks and the way that they transfer money overnight, the collateral that they have to, essentially post for even just running exchanges in general. It's T+1, but what's it going to be like whenever things post instantly, settle instant? And then you can go back out and do another financial transaction instantly. Y'all see Figures IPOing? Yeah. Going to be interesting. That's Mike Cagney's business. Robinhood has tons of blockchain related job postings out of Toronto. Yeah, because of WonderFi, probably. Because they're going to tie in well with that acquisition. I'm telling you guys, it is going to be I can't guarantee anything. I'm not trying to do that, but if a technology is faster, cheaper, and more secure, I think that gets adopted. And this is not like a DVD versus Blu-ray conversation where the better technology is just not being seen. I mean, Ethereum is being seen. Everyone's focusing on it. In 5 years, waiting 2 business days to transfer money between accounts equals antiquated? 100%. Absolutely. And yeah, I don't know. We just have to continue to wait for institutions. Like, it takes time to build the products that are going to be useful. Yeah. All right, ladies and gentlemen. Thank you all so much for watching. Really do appreciate your time. If you guys like the video that I ended up posting today on SoFi, let me know, and I'll make more daily uploads along with these daily live streams. If you don't, that's fine too. Let me know if you don't like it. If you haven't seen it, go watch it. Bye for now.